if I look at all the options, there's no better option. Bitcoin is the least risky strategy that we can find. If we're acquiring real estate in Africa or Asia or South America, what could go wrong there? If we bought stocks, there are plenty of stocks that are down 80%. And if you bought something that, that's on the wrong side of some government policy, then that can work against you. And, if we just kept buying gold, it's just going nowhere one way or the other. So I think that what you're seeing is MicroStrategy just dollar cost averaging as a public company. And you'll continue to see us do it because we generate cash flows and we're profitable. And this is by far the most rational thing we can do.
Hello and welcome to Money Talks. In today's video, Michael Saylor, the popular Bitcoin bull and CEO of MicroStrategy, updates about Bitcoin's market performance, when will it bottom, and whether or not he will acquire more Bitcoin in the future. Saylor also speaks about the importance of long-term holding in crypto industry, the risk of a margin call for MicroStrategy, and his outlook on stablecoins. Make sure to stick around till the end of this video where Michael Saylor reveals the major catalyst behind Bitcoin institutional adoption and why he expects some big moves in early 2023. So without wasting any time, let's dive right into the video.
Yesterday I tweeted, "Stay humble, stack sats," in an homage to Matt Odell and all of the Bitcoiners who have known for the past decade that if you're going to arrive early to a revolutionary technology that's and the first digital commodity that's monetized in the history of the world, you're going to be in for a bumpy ride. So Bitcoin has been a continually bumpy ride for the past many years. I think even since we got into the market, it's gone through nearly 3 cycles. And the only rational way to approach this is dollar cost averaging. So MicroStrategy is in essence just dollar cost averaging into Bitcoin. Our strategy is we acquire Bitcoin, we hold Bitcoin, and we just happen to believe that 100 years from now, Bitcoin is like Manhattan, and you're just going to want to hold as many blocks of Bitcoin as you can. If you acquired Manhattan in 1907 and 1913 and 1917 and 1921 and 1928, 1932 and 1947, and then another thing in 1953 and 57, and you asked someone, what was the right time to buy? And do you regret having bought, the top? I can't even remember which of those years were going to be the most efficient times to buy. Generally, the view is that once you find a good thing, you just want to consistently acquire more as cash flows allow you. So our strategy is simple, right? We acquire Bitcoin, we hold Bitcoin, we don't sell Bitcoin. Right? The only mistake you can make is acquire it with so much leverage that you get force liquidated on a drawdown.
When MicroStrategy Inc. began buying Bitcoin in bulk in the summer of 2020, CEO Michael Saylor said it was because inflation would make cash worthless. The crypto pile he has since accumulated was worth $3.4 billion less at the end of the second quarter than the previous one. Technically, the decline is yet another paper loss for the enterprise software maker under U.S. accounting rules until any of the Bitcoin is sold. But there are consequences. MicroStrategy will likely need to take a substantial impairment charge when it reports second quarter results. And for shareholders, the stock tumbled 66% in the quarter ended Thursday, outpacing Bitcoin's 59% decline.
Yeah, I think the key to keep in mind is when we had about $4 billion, almost $4.5 billion of unpledged Bitcoin, we borrowed 200 million and we agreed to pledge Bitcoin as collateral. So we entered into a loan, which was a loan to value of 4%. And when Bitcoin was cut in half, we're still 10x over collateralized against that. So in essence, this is kind of like having $1 million of collateral and borrowing $40,000, right, against it. If Bitcoin goes down by 95%, then you would have to pledge some additional collateral. But when we did it, we also have other cash and cash flows, and we have other assets. So we were actually prepared for the worst case.
Saylor has downplayed any concerns, sticking to the strategy and adding to his stockpile last quarter as Bitcoin experienced its biggest price drop in more than a decade. MicroStrategy noted at the end of June that it will report results as normal later in the coming quarter, even though Wall Street regulators typically require companies to flag big losses much earlier. MicroStrategy's Bitcoin stash was worth about $5.9 billion at the end of the first quarter, which means that with Bitcoin finishing around $18,900 on June 30th, that same pile, including some small purchases announced at the end of June, was worth about $2.45 billion, or 58% less than just 3 months ago.
Yeah, well, when I think about the way that the price changes, I think there's the demand side and there's the supply side. So if I was building a model, it would be a multi-dimensional, multivariate, nonlinear dynamic model. It wouldn't be a single variable linear model. It wouldn't even be a single variable dynamic model. So I think it's indisputable that the halvings have an impact. That is, when you cut the block rewards in half every 4 years, that has a positive impact on the price because that cuts the supply that's being sold in the open market by the miners or the supply that's out there. So I think that's one element. But my model for the price of Bitcoin is it's a function of adoption and it's a function of technology utility and it's a function of inflation. All three of those. And then it's presumably a function of time, especially in the sense that over time, the supply hardens, right? And Bitcoin mining supply decreases because of the halvings. So all of those are important variables. When the technology improves, like when we're building Bitcoin into a Cash App, if you build if you build Bitcoin into Cash App and then you build Lightning into Cash App, and if I can send you $5 of Bitcoin for free in a split second, then the utility of Bitcoin is much higher. And as Lightning rolls out to all of these application protocols, as companies like Kraken, when the exchanges build Lightning and when the wallets build Lightning, and when there are other applications with Lightning, the utility leaps, the cost, the friction decreases.
At the height of the crypto market collapse, MicroStrategy bought another 480 Bitcoin worth about $10 million between May 3rd and June 28th for about $20,817 each, according to a filing with the U.S. Securities and Exchange Commission Wednesday.
I think the catalyst for institutional adoptions are, there's a short list of them. One of them is FASB accounting. There's this project to review accounting for digital assets on a balance sheet. And that's been formalized. And I think we expect something next year in the year 2023. It could be early next year if we're fortunate. But a lot of CFOs and a lot of CEOs are watching that. That has an impact on the way you report your P&L and your balance sheet. I think another interesting milestone is the availability of a spot ETF. And a big milestone that we should keep our eyes on is what happens with regard to the Grayscale, the GBTC application to become a spot ETF. Because there's a deadline coming up in July, in early July. I don't have the exact date, July 10th, July something. And right now there's a process going on, and the SEC has allowed individual investors to weigh in on this. And something like 11,500 letters have been submitted to the SEC, 99% positive, maybe 99 more than 99% positive, overwhelmingly positive in favor of a spot ETF. I think that if the SEC grants that, that will be the first spot ETF in the history of the industry.
While a few crypto-centric companies have also added Bitcoin to their balance sheets, the beating that the digital asset and other coins are taking in the current bear market is likely to make any potential entrants think twice before diving in. Still, some advocates of digital assets appear to remain unconcerned about the recent price plunge over the long term, as well as Saylor's strategy.
So I think that we are seeing more adoption. It will continue. All of these processes, they're rolling forward, but you just want to keep a checklist of them. And every time you see one more regulatory milestone or one more milestone where a big bulge bracket bank adopts Bitcoin and adopts stable coins, that's a real positive, bullish thing for the industry.
So, do you think it is the right time to go all in on Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.